Okay, right. So welcome everybody to this this discussion about SBA loans in the US. Now, SBA is the Small Business Administration. They offer a government-backed guarantee scheme for loans. There are similar schemes that exist in other countries, but this today is specifically about the US solution. So this is especially tailored for members over in the US. I'm really grateful to be joined by Dan. Dan is an exceptional finance broker and able to put you in touch with many different solutions for finance. And obviously the SBA is just one of those solutions. And Christian, who is actually from a non-bank SBA lender. Now, as some of you know, I used to own a bank, and we would call this a loan production office, which generates loan applications for the bank. They're often much easier to deal with in terms of their ability to be a bit more transparent with their lending criteria and things like that. So I think this is going to be a really interesting couple of contacts for you to have in your Rolodex going forwards, but also just to be aware of what's available from the SBA, because as an entrepreneur in the US, it really is a gift from God. You can go out, use this money guaranteed by the government to go and do a pretty substantial deal if you structure the deal right, and then effectively pay it down, recycle, and go again. There's no restriction on how many times you can go back for more. So it is something that if you have that green card or that passport, it's well worth doing. But yeah, I'm not going to talk forever here, so I'm going to hand over and let them explain exactly how it works. Dan, Christian, who'd like to go first?
I'll jump in here. Thank you, Jeremy. Really appreciate that intro and the opportunity to talk to your group here. What you're doing is pretty amazing. Been following your work for quite a while, so honored to be part of that. So I'm going to share my screen here, if that's all right. Let's see, make sure this works out good. Okay, you guys see my slide deck here pretty good? All right. So yeah, like Jeremy mentioned, my name is Dan Kalis. My company is Fully Fundable. We're a broker, and I'm able to source business loans, whether it's for acquisition, for working capital, a lot of different things, and also for real estate investors, which is going to be less relevant to all of you here. But if any of you are doing that, we can talk as well. But today I wanted to bring on my associate, my friend Christian, who has been in the SBA space for several years and is an expert and a specialist, and that's all he does with his team. And I'll let him explain a little bit more about that. But I got really reinvigorated. This is me here, if you want to take the time to read it. But I got reinvigorated about SBA recently because I've been in the alternative kind of finance space, and I was in the mortgage business before that. But I've been in alternative business finance since probably 2010, and did a lot of different types of loan programs. I mean, even everything like spanning, like if you have money in 401k, you can turn it into a self-directed IRA and use that. I don't know if Jeremy's ever probably talked about that sort of thing. There's a problem called ROBS. But when I got in touch with Christian, it was really refreshing because he has been working with what I would call like a non-bank divisions or non-bank lenders or non-bank divisions of a community bank, as opposed to say like a large, like a mega bank. I'm not going to mention names, but you know, you guys can think of those sorts of things where you think of this like slow process and red tape, almost operating like a government entity. And so when, and I'll have him explain also kind of what the role of the SBA versus the lender is. But I was like, you know, there's a lot of people that were buying businesses. I you know, have been collaborating with a lot of business brokers over the years to do different things with exit planning, and you know, and the general sentiment was that, man, this is just like a pain in the butt. Too much documentation, takes too much time, they're dragging their feet, blah blah blah. And he's like, no, like we do things different. Like we can actually get things done a lot faster because it's all we do. And not only that, but you know, the SBA has certain guidelines that they put on their loans that have to be met. But then the bank has the flexibility of saying, we're going to do that. And I think the programs that Christian has don't do that. So I'll let him get into that a little bit too. But we want to kind of give you guys a general overview of just some of the features of the program, which some of you are going to be very, very familiar with. And for some of you, it'll be the first time. And then we're going to whip through that part, talk about some interesting strategies for using SBA loans strategically. Christian has a couple case studies and maybe some examples of some things for SBA related to acquisitions, and then we'll open up for Q&A, and then we'll leave it from there. So I'm going to turn the slides over to Christian. And like I said, he has a lot of experience, and this is his specific, superpower. And he leads a team of originators. So basically, I'm a broker and I work with him. And so when I do an SBA loan, I go to these guys and they put it together. So, Christian, if you want to maybe just kind of give a little quick overview on, how you kind of see this as a program and a benefit to people that are serial entrepreneurs here as part of this group, and the benefits of it. And then maybe a little bit about, why working with the type of lender that you work with is different than going to a mega bank type of situation. And then we'll keep going from there. Sound good?
Sure. No, appreciate it, Dan. Appreciate the time, everybody. I'm Christian Bowles. I'm actually National Sales Manager for the SBA division called Credit Bench. As Dan mentioned, there's a community bank in Tampa, Florida called First Home Bank, and we are the SBA loan production for them. And what that means is basically that you really get a specialized, tailored approach to the SBA lending space. As both Jeremy and Dan mentioned, the SBA sets out a 400 to 500 page rule book and tells banks across the country, if you would like to participate in our program, here's what you need to do, the rules you need to play by. And so, as they both mentioned, there are two different sets of rules when you're dealing with an SBA lender. There's the SBA rules, which nobody can get around, and then there is lender-based rules. And so what we try to do is strip out those lender-based rules and just say, okay, if the SBA is allowing us to make a loan under a certain set of parameters, we want to be as close to those parameters as possible, because that's how the true use of the program is supposed to be. What you'll find is what Dan mentioned is some of these larger mega banks that you might deal with, they do a bunch of different types of products, mortgage, business banking, investment properties. All we do within Credit Bench is SBA lending. So we feel like between owner-occupied commercial real estate purchases, business acquisitions, partner buyouts, franchise lending, equipment, anything that an operating business would need, we feel like we do it very well, because that's all we do, and we solely focus on that aspect of the lending. Go ahead, Dan.
I was trying to unmute it. Yeah, no, it's a great overview. And I think I want to kind of start off with just sort of the why and when to use SBA loans and the benefits of it. I remember, there's only a few people, I think, that, as a serial entrepreneur myself, and having been involved with a lot of entrepreneurs and digital marketing focused people, Jeremy's right at the top of the leaderboard when it comes to those types of people. And there's only a few other people that teach this type of entrepreneurship and growth through acquisition and buying businesses versus starting them. But usually when you deal with people that are at that level of sophistication, they do tend to say, hey, if you can get an SBA loan, you should do it, because there's all these other great strategies. You could do seller financing, leverage buyouts, and I'm sure you guys are learning that kind of stuff. But sometimes it makes sense just to use an SBA loan, because quite simply, and I don't know, Christian, you tell me if the rate has jumped at all since we last talked, but generally the rates are the same for everybody. You either qualify for it or you don't. And it's, from my understanding, and again, he's more of the expert. I'm kind of like, doing a lot of the consulting on the front end and working with what program's the best. But, you're talking about around 6%, prime plus 2.5, and it's variable. So whatever the Wall Street Journal prime rate is, and I think that could change on a monthly basis even, and who knows, we may be encountering that pretty soon. So time is probably of the essence if you're going to do it. And, it's always, SBA is always going to be, SBA loans are always going to be the least expensive business loans out there, with the exception of maybe a commercial mortgage that is secured against property. And I think for those of you that haven't borrowed money before from a business standpoint, I want to just really encourage you to kind of make sure you take off your consumer hat, because even though we're all entrepreneurs, sometimes the default is, what's the rate? Like you become rate sensitive, and you become concerned about, how am I running my business? My numbers got to be tight. You got to have like a very good fiduciary responsibility of your business. But if you catch yourself sometimes thinking in terms of, well, what would my mortgage on my home be? Well, it might be 3 or 4%, or what would a car loan be? Maybe something similar. When it comes to business lending or commercial lending, I mean, to get single digit rates is almost unheard of. And so I want you all to think of, if you're not already in that mindset, the importance of access to capital versus cost. It just so happens, though, that with SBA loans, you do get, the best cost as well. So as an example, if you were to take out a $350,000 SBA loan which is at the top of the range for the express version of the loan, and but they go up to $5 million. You know, you're talking only $3,885 or something like that per month. So it really preserves your cash flow. And so you're talking 6%. The payback terms are either 10 or 25 years, depending if there's real estate involved. And again, if you guys have questions, or Christian can elaborate if I speak out of turn at all, but if you buy a business that includes real estate, say you bought like a hotel, or you bought a restaurant that had a standalone facility or something like that, or even self-storage, which is becoming really key, then you get a 25-year term. It's going to be the same rate. And obviously the amortization, the monthly payment's going to be spread out. There's no prepayment penalties, which is really amazing. And then you get, in general, 90% LTV on acquisition financing. And so it's a 10% down payment. Now, Christian, wasn't there some sort of incentive that the SBA is kind of running through September as far as like a removal of a fee that they normally had? I don't know if that was COVID related or something.
That was COVID related last year. A couple questions in the chat though, real quick. 51% of the business needs to be owned by either US citizens or permanent residents. So with green card, those are the people that actually guarantee the loan. So just a quick answer here, 51% of the business and the non-US citizens do not personally guarantee. And then another question is, what fees or costs up front are there? So unlike a conventional mortgage at a bank or conventional financing that might throw an origination fee on the loan that goes directly to the bank, we only charge closing costs. And then from those closing costs, there is an SBA guarantee fee that the SBA charges that goes directly to them. So costs vary depending, but your closing costs are going to be the only thing associated with the individual bank and the individual lenders, which depending on the transaction are relatively low. And then one more question, it looks like, do they require personal guarantees? Yes, all of these loans will require a personal guarantee. Please keep in mind that on the acquisition financing, there are not collateral requirements. So when you look at that, that's a major differentiator when you look at an SBA loan versus a conventional loan, is that there are no collateral requirements, but there are personal guarantees that are associated with that.
Just a quick query on the personal guarantees. Do they kick in after the 80% is guaranteed by the government, or does the government step in after the borrower's been taken to the cleaners effectively?
So the government would step in. So I guess make quick clarification here, because one of the common misconceptions with SBA loans is that the loan actually comes from the government. So as for us, we get the money from the bank, and the bank makes you a loan directly without the government's input at that particular point in time. Where the government would come back to play is in the back end process. If for whatever reason the loan were to default, then the personal guarantee would kick in, and then whatever loss that the bank was sustained after that sort of personal guarantee, then the government would step in and basically reimburse the bank 75% of that loss. So Jeremy, that's kind of where the government gets involved, is completely on the back end after the fact. It's like an insurance policy to the bank, but it's way after everything's collected and tried to be made whole.
So it's a good idea not to have assets if you're signing one of these.
Correct.
Yeah, and it does get confusing because during the beginning and the kind of the peak of the COVID stuff, and they were doing the COVID relief loans, there were actual loans from the SBA being made directly, or grants. So there was money being deployed directly, but this is different. This is from the lenders. The lenders have the incentive. It's almost like an insurance policy, if you want to call it that. The thing about the personal guarantees, that's something that comes up to me a lot as an originator, and it's really, really hard to get away from that unless you get to the point where you're doing loans that are, I guess you would call them like mid-balance or mid-cap loans, 10 million plus, which is beyond the scope of SBA lending. That's when you start to get into these non-recourse loans and that. I mean, there's certainly ways to do it, of course. And if you're doing seller financing, you can negotiate whatever you want. But when it comes to a commercial loan from a lender, getting away from a personal guarantee. The bottom line is that whether you do or not, if you default on a loan, everybody has the ability, especially in the United States. I don't know how it works everywhere else as much, but it's a very litigious society. So they're going to sue you anyway if you default on it. You know what I mean? So just do what you can to not default on it. But yeah, like you mentioned, all 50 states plus the U.S. territories, borrower has to have a 650 FICO on an average. So again, this is going to be weighted if there's more than one partner. One of the things, Christian, I would love for you to elaborate a little bit more on, because I'm sure that this is like a really important part of this whole strategy, especially the creativity that Jeremy and his team use, is like, let's just say somebody was buying a $5 million business. They're at the cap of the range and they need to come up with a $500,000 down payment. If the borrower wanted to basically raise private money to come up with a down payment in the form of a partnership, an LLC, and they have like a general partner, limited partner, can you kind of speak to that? Because everybody always wants to come in with the least amount of money possible, but obviously lenders set down payment, parameters for a reason. They want skin in the game. So somebody had to come to the table with cash. So maybe give an example of what that would look like.
Sure. So variety of different ways that you can structure that, Dan, but basically the way that, because a lot of times it gets into personal guarantees. So personal guarantees only come into play if an owner has more than 20% ownership in the business. So a lot of times somebody's doing an acquisition, they need the 10% down payment. If they bring on somebody, typically that person will keep under 20% ownership in the business, because it still gives them the ability to recoup that investment, but also does not allow them to have to guarantee that loan. So, typically that's what we see, is that people are very particular of the personal guarantee rules, which again comes into play when an owner owns more than 20% of the business.
Okay. Well, and if anybody has any specific questions more about that,
I would just drill down on that 10% thing again. So the skin in the game, I presume that could be a business you already have, where you're acquiring a competitor. In that scenario, do you still have to put down cash, or do they accept the fact that they're getting a charge over both businesses and therefore that's your skin in the game?
No, so it does have to be cash. However, if you do have, it can come from another business bank account. It just cannot be borrowed. So
okay,
if
and
you
what
have
about
another,
what about then like management buyout scenario, where perhaps you're already a shareholder in the business and you're buying the balance of the business from them?
correct. So if you already have 10% ownership in the business, we will consider that your equity injection.
Okay,
so
great.
if you're doing partner buyouts are usually pretty easy, because if it's 50-50 or even 75-25, anything greater than 90-10, that the minority owner or the partner buying the other person out does not have to bring in any additional money, because they've already we count their ownership as equity.
Okay, and is there any rule around how long they have to have been a shareholder?
Yes, 2 years.
2 years. Okay, right. It's very helpful.
All right. And then kind of the last part of this, like when to use SBA loans. And of course, there's more reasons than just this, but I'm kind of thinking from a strategic standpoint, is that when you all are looking at acquisition targets, companies to buy based on different, value add opportunities, however you see that, everybody has different skill sets. Some people are buying them and saying their marketing is not optimized. So I'm going to take their marketing's terrible, but they're succeeding in spite of themselves. I'm going to take the business over and I'm going to apply some really great digital marketing campaigns. Sometimes it's because you're a financial engineer and you know that they're doing good despite having very disorganized financials. One of the things that I think is a huge opportunity is if you can acquire a business that has like a pretty bad commercial debt stack, whether they have a lot of merchant cash advance loans or other just anything that's in the double digits. And, gosh, you guys have probably seen stuff that's like, 20, 30, 40% in some cases, or it doesn't even matter. It could even be a bunch of like business credit cards that they don't want to keep on. At 6%, that arbitrage play makes a huge difference, especially depending on the amount. So if you guys can find businesses that, and you look at it and you normally would think, well, this business has a lot of crap debt on it, I'm not really interested. Maybe look at it from a standpoint of, no, this is great because I can immediately, as soon as I take over the business, refinance that debt with an SBA loan. So now what I do want to go back to Christian on this is, in what cases can you actually add working capital to the acquisition price so that it goes in right away and pays it off, versus doing the acquisition loan, closing it, taking over the business, and then once the business is in your hands, doing a working capital loan, or to do that? Or could you do both?
So we always include permanent working capital into an acquisition project. It's typically 3 to 6 months worth of operating expenses, because what we want to do is make sure that the business is well capitalized. And what we understand in the acquisition space is when you make an acquisition, your expenses will start day one. Revenue may take a couple of days or weeks to trickle in. And so what we want to do is make sure that that business is well capitalized and verify that they have the money to make those payments and any expenses, whether it's utility bills, payroll, whatever the case may be. We want to make sure that they have that. And so we will always roll in permanent working capital to every acquisition that we do.
Beautiful. And then of course, if down the line you need to go back to it, like Jeremy mentioned earlier, you can go back and get these loans as you need it. I'm just going to whip through some of the stuff. This is some of the stuff you can kind of find online, but just so you know, the SBA 7A program is the primary program we're talking about. There are other versions of this that we can get into later, but according to SBA, the most common program is SBA. So this is their stated uses, but this doesn't really include this doesn't specifically state marketing advertising, but of course that could be part of it as well. I don't know why they don't mention that, but long and short-term working capital, I guess that would probably fall under working capital. Inventory, receivables, equipment, machinery, real estate, buying a new business, like we said here, and then refinancing debt. The maximum loan amount for 7A is $5 million. And then eligibility factors depend on what the business does receive as income, credit history, et cetera, things we already mentioned over there. To be eligible for, they call it loan assistance because that's the government's involvement, is they're assisting the lender in reducing risk enough to give these amazing terms. So it's pretty simple. Business must operate for profit. So obviously nonprofits are not going to qualify for this. Be considered a small business as defined by SBA. Christian, what is that definition? I was looking for that. I couldn't find that.
Sure.
Like revenue or employee?
So no, it's a pretty broad term. Typically, unless you're publicly traded or owned by private equity, you're not going to be considered this, but it's the average of 3 years, your net income over $5 million. Over the past 3 years, does your net income average over $5 million? So typically what they find is if your net income over a 3-year period averages over 5 million, probably don't need, lending of this size.
Got it. All right. So using alternative financial resources, including personal assets before seeking financial assistance. I don't know if that's always a good idea, but that's what they put there. Again, pretty self-explanatory stuff here. Here's some of the documentation process. I would say in general, having done, kind of bridge loans that require only bank statements and can be funded within a few days, obviously those are going to be much more risky, much more expensive. If a lender is going to give you these amazing terms, they're going to want to know a good amount about the business. So you need to be prepared. I mean, you need to have your financials defensible, organized, right? And sometimes this has caused me to build friendships and partnerships with fractional CFO firms, and at the very least CPAs and bookkeeping firms, to say, the shoebox full of receipts isn't going to work in this case. You guys might be surprised. You might not be surprised, Jeremy. I'm sure you're not, to hear, some as a loan originator, I get to kind of peek behind the curtain, and I get to see, all right, these people that are apparently running these amazing businesses, these very successful entrepreneurs, are way disorganized, or they're not making anywhere near amount of money that you think. And so it gives me the opportunity to really help them and say, okay, if it takes you a week just to get me some basic financials, you don't have the proper team in place, you don't have the proper vendors in place. So this is really important. I don't know if there's a general statement that you want to make, Christian, on this in terms of what's required, but you're going to need a few years of personal and business tax returns, profit and loss statements, the basic kind of stuff like that. I don't know, Christian, maybe a better way to ask this is, are there any big surprises that you see borrowers are like, oh, I wouldn't expect to have to produce that, but to have them be prepared?
Not particularly. I would also mention, since we are very acquisition heavy during this discussion, that if a seller is not willing to turn over tax returns to you, it's probably not a good thing. But a bank is always going to require that the selling entity provide tax returns that we can verify through transcripts. So if somebody says, well, I don't have a business, how am I supposed to provide those? If you're doing an acquisition, it's the seller's returns and financials. And if they're not willing to turn those over to you, probably a little bit of a red flag there. But
that's fair comment. Yeah. So there's a couple of questions in the Q&A, and then there's some more questions in the comment section. So I'll just go through those. The first one is in the Q&A, which says, could the target be purchased directly by an SPV where the shareholding structure is as follows? The main shareholder has M&A experience, the minority shareholder has sector experience, and then a further minority shareholder, which is the equity check. I presume so. Yeah.
There are multiple ways to structure the ownership. I think when you look at an acquisition, there's going to be really two main components that we're going to look at. It's going to be financials of existing business and how they perform, and experience of buyers. So if you have this sector experience person as the manager and they've got the experience, that's definitely something we can rely on. But really at the end of the day, what we see a lot of times in an acquisition scenario with multiple people is they sometimes like to make sure that they pay attention to that 80-20 rule. Remember, anybody over 20% guarantees the loan.
Yeah. Some banks consider seller's equity as buyer's equity towards the down payment. I think that's what we discussed, isn't it? That if you're already a shareholder, effectively, you can forego that. How many points are the closing fees?
So closing costs are not point related. It's going to be, if you need a business valuation, it's going to be $3,000 for that. If we do any title work, it's going to be the attorney's fees for that. So typically we see closing costs are going to range somewhere between $5,000 and $15,000, depending on size of the loan.
Okay, that's a good answer. I hear that SBA offers insurance for the SBA loan, but some say they're not offering that. Do you have any clarification on this?
I'm not sure what insurance would be. I
presume there's some kind of non-performance of loan insurance or something like that.
The lender's the one that's insured.
Yeah, the lender is technically insured on that. So
yeah. Okay. Yeah. I mean, I know in the US you don't have personal guarantee insurance, for example, which you can get in some other countries, but yeah. I guess you get life insurance for the guarantor, and you just have them shot if there's a default. So you have very liberal gun laws there, so it'd be. Do the individual lenders set fees?
Yes. The closing cost fees are collected and set by the lender. They'll also be on your closing settlement statement.
Can anyone not living in the US benefit from the process?
You have to be US citizen or green card holder, and the business has to be domiciled in the United States.
Yeah, so I guess you could, if you partnered with a 51% shareholder who was a US citizen. Yeah. Mm-hmm. Is there always a variable?
Yes.
Cool. Are there any programs for veterans?
There are some smaller programs for veterans. We do not actually offer them. Some of them are done directly through the SBA, but typically this is just sort of a small business in general program.
Cool. Can a British citizen with a green card get SBA funding?
Yes, as long as you are considered a permanent legal resident of the United States, and there is no time period by which you are allowed to be in the United States, you would qualify for SBA.
What about credit history as it relates to that, Christian? Don't you need to have a U.S. credit score, or does that not be in the system for that Social Security number or ITIN number?
You would have to have a credit score, but I would think that if you're a permanent legal resident or citizen, you're probably filing taxes, so you would already be in the credit system.
Yeah, I think you need to do the ITIN, but
yeah, you need to run up some credit card bills and pay them off regularly. Yeah, get noticed. As far as variable, will the percentage change as rates go up, or is it locked in at the beginning?
It is variable. As Dan mentioned, kind of at the top, we are tied to the Wall Street Journal prime rate. The prime rate is published in the Wall Street Journal every day. The prime rate only changes when the Federal Reserve votes for an interest rate change. So unlike the Treasury that changes almost on seconds because it's traded regularly. The Wall Street Journal prime rate does not change unless the Federal Reserve votes for an interest rate change, which can go up or down. When COVID hit, we saw the prime rate drop 2.25. So your interest rate on your loan dropped by 2.25 as well.
Yeah. Although I think it would be fair to say we're probably into an era now of rising rates
Correct.
for a while. Yeah. If one of the spouse signs the PG, how does it impact the other spouse in case of a default?
So it depends on if you want your spouse to be able to use their income. So a lot of times when somebody buys a business, depending on the cash flow of that company or what they are going to take out or need, we can look at two different parameters where if the spouse guarantees, we can use their income and we don't have to show any income coming out of the business for you personally, or they don't have to, and then we just take an owner's draw out to pay your living expenses. If the spouse does not guarantee the loan, they're not responsible for that debt.
Okay, I think probably the question was digging at if one person owns your home and the other one guarantees the loan, does that work?
So in that particular scenario, if the home, so the way that the collateral requirements are structured is the SBA basically says that if the loan is not fully secured by business assets, which in an acquisition, it's usually never, we have to look at personal collateral, which requires us to look at your house. If you have more than 25% equity in that home, we would have to take a junior lien position behind your existing mortgage, or if you don't have a mortgage, we would take a mortgage on the house. In that particular scenario, the spouse would have to sign a limited guarantee to their percentage equity in the home. But
Okay.
if you don't own a home, nothing we can do.
But if they're buying a business that does have the asset cover, then I presume that's not an issue.
Correct.
Yeah.
Incidentally, we are currently staying with a good friend of ours who's a family law practice attorney. So if we need to call her back in here for any specific legal questions, we will. I'm gonna, and I know you're having, these are great questions, everyone. I really appreciate that. I'm just gonna keep like kind of scrolling through these slides so you guys can read in the background, just some of the basic documentation, some of the kind of boring stuff with business licenses, business lease, just so you know, like, again, this is a serious loan, you know, like you're gonna need, and sometimes I think what going through this process really shows is how real of a business do you have. Sometimes people, they think they have a business and they have a hobby, or they're disorganized, but this really shows you if you're bankable, then you're bankable. And I think when you, in the scope of like exit planning and exit strategy and value optimization for that, if you're buying the business and then ultimately with a plan of exiting and selling yourself, you're going to want to have all this stuff in order anyway. So the more airtight your business looks, the better it's going to be when you exit and when somebody comes in to look at your books.
Yeah, no, it's a really common fault with small businesses, and actually we see it more in the US than in other countries. So in Singapore or the UK, for example, there is a system for filing accounts, which means that they generally have to be quite well put together to be submitted to the authorities. Whereas in the US, obviously, it's like self-declaration of tax and stuff. So things tend to be a little bit more convoluted and maybe a bit less organized in a lot of cases, because the companies
that doesn't surprise me at all.
Yeah, the companies tend to be run more to mitigate tax than to generate profits. So it's
probably similar to why the U.S. has the most amount of obese people in the world. I don't know. There's maybe some correlation there.
Some other correlations, yeah. Is there a minimum percentage of shares the equity check partner must have? Well, I mean, the equity check needs to be 10% plus. So I guess they would probably
what that really comes down to is kind of how much they feel that check is worth. You buy $1 million business, somebody's willing to come in with $100,000. What is that worth? If you're just a really good negotiator and they own 1% of the business, congratulations. If they want to own 15, 18, 20, 25, whatever, that would just be however you write your operating agreement when you structure the partnership.
Yeah, but obviously more than 20, they become a guarantor. So you've probably got a helpful negotiating tool there that you can keep them under 20. What is the max loan limit? Can you combine a 504 and a 7A?
The max loan limit on a 7A is $5 million. You cannot combine a 504 and 7A above $5 million.
Okay.
So 504 gets into a very structured, rigid program that is real estate specific. But the bank is essentially only taking on a 50% conventional mortgage, and then you have a community development fund or a CDC that puts up a bond, debenture bond from the SBA. So those have limitations to them as well. So the 7A is a $5 million mark, and then the 504 is 11, but again, it's real estate specific, very structured parameters, much different than what we're talking about today. Today is pretty much just 7A lending.
Can umbrella insurance be used to protect from PG? Like I said, I don't think there's any insurance against PGs in the US at the moment. There are in other jurisdictions, but we've explored this quite comprehensively. I'm guessing it's something that might catch on and might appear, but right now there isn't. Can we ask the vendor to leave an amount of cash in the bank for it to be used as collateral for the PG? So I've seen this before. If you leave it in the bank, it doesn't really help, because obviously, I mean, it will go to help extinguish the creditors, the debt in the company, so it'll make the PG less. But unless you have the amount of money to cover the whole loan, it's not really going to work. What I have seen people do is the person taking the risk pays themselves a higher level of withdrawals from the company and keeps a bit of a rainy day fund in case there is some future problem. But like I say, they're on the hook for the whole amount if it does come. So it's hard to borrow the money and have enough to pay it all off at the same time. What's the most unique SBA loan approach you've been able to do that adds value for an acquirer?
Oh gosh. It really just depends on, what you're looking for. One of the benefits about the SBA, and there are obviously a lot of gray areas that they allow for. The black and white pieces, there's very few of those. But again, you start to get what we call SBA requirements and then lender requirements. And so if you were to go to maybe one of the top 5 largest banks in the country and try and get an SBA loan from them, it would look very different than coming to us and getting an SBA loan. Because again, there's different layers that go onto that. As far as, I mean, I've seen quite a bit of everything. I've seen, management teams, buyouts, owners, with very strategic financing because the owner wants to sell to the management team. I've seen investment groups come in, back, somebody that has a ton of experience in the industry, and buy businesses that way. There's a ton of different ways. Strategically, it really is just so deal specific and very targeted towards each specific business.
Okay. Somebody just saying lots of risk that doesn't exist in other strategies. I guess, yeah, a lot of the stuff we talk about in the Harbour Club avoids personal guarantees, avoids lots of debt. So it is a very specific kind of leverage buyout type strategy and another tool to have in your toolbox. But yeah, completely agree. It's not for everyone, but it's very available cash, and particularly if the business has assets or has real estate, and there's an upside, a quick upside in it. If you can sell it and repay the loan, then I think it's worth at least considering. How do people get pre-approved for a certain dollar amount? Lots of MBA grads are creating search funds where they have a certain amount of funding pre-approved.
So unfortunately, in the acquisition space specifically, it's going to be the approval process is going to be very tailored towards the business being acquired. Is that business selling for the right purchase price? Is the multiple right? Does it generate enough cash flow to repay the loan? Salaries of the new owners? So in the pre-approval process, you would work with Dan and myself to work on that. But unfortunately, it's going to be very targeted towards the business that is being acquired. And so therefore, it's going to be very tough to get you any sort of pre-approval of hey, you can go buy any business out there that's up to $3 million.
Yeah, I think what they're referring to is, I mean, if you've got a good relationship with a bank manager, you can normally get a fluffy letter of intent or term sheet from them, which basically gives you the rate of the loan, the amount they're going to lend you, and the subject to, we'll give you this money, and it will probably be just based on the SBA parameters. So they say, you know, subject to, we can give you $5 million at 6%. This term, et cetera, and I see those term sheets being spat out quite regularly. And of course, if you're a buyer and you're approaching brokers and they go, have you got proof of funds? And you just throw them a letter from Wells Fargo that says we're going to give you $5 million. Most brokers are stupid enough to believe that and let you go and visit the business. So, but of course, they're not going to lend sight unseen.
Right.
And yeah, so, but
yeah, you would just work with, you could work with Dan and myself and we'll get you whatever you need.
Yeah, those kind of term sheets are fairly easy to get from, pretty straightforward. Does the SBA allow for a buyer hold back or other financing in the deal structure?
Yes, absolutely. Typically, it's viewed pretty favorably from the bank. If the seller is willing to do any sort of carryback, all that does is buy them into the success of the future operator. So absolutely, and it is viewed very favorably when in those particular situations and when that happens.
So a smart deal structure versus just throwing a ton of cash at them is
correct.
Yeah, fair enough. Question for Jeremy. Once a business has an SBA loan, can it still qualify for agglomeration with MBH? We'd have to have a look on a case-by-case basis. So what's the asset side of the balance sheet look like with that debt in there? Is it sustainable or is it over leveraged, basically? So we'd always consider stuff. There was another question here and I can't see where it's gone. Oh yeah, if you've successfully received and paid off an SBA loan before, does that have any positive bearing on a bank's or SBA's decision to loan again? I think one of the important things there is it's not the SBA's decision. Yeah, it's all done by the bank, and the SBA just comes in and comes to the rescue if it all goes horribly wrong.
Correct. And I would say, obviously it's similar to personal credit. Repaying bills and paying back loans is always a favorable thing in the bank's eyes.
Perfect. And what's your bank's position regarding existing management guaranteeing the SBA? So it's an owner buyout, coupled with a new investor taking an equity position, 19% or less in the business. I think we've kind of covered that, haven't we? That's
well,
fine.
The one thing
but you wouldn't need to put the cash in, I'm guessing.
Yeah, but the one thing I would mention, and not sure about this particular situation, but whenever you do an SBA loan, you do have to buy, or your group or whoever's in the process has to, at the end of it, own 100% of the business. So you cannot use an SBA loan to buy into a business that you are not going to own 100% of, or your group is not going to own 100% of.
Yeah, but you can buy out somebody else. Yeah. What? I know we've had that one and we've had that one. I think. Yeah. Oh no, there's more questions down here. Here we go. If you own 10% equity of a company and wish to do an MBO, is the 2-year mark a requirement or suggested guidance? Would you do this for a good loan deal if it was 6 months in?
So we can do it. It's a matter of whether or not you're going to require that additional 10% equity injection or not. Whether we can do it as much as 1 month or yesterday, but you're going to where that 10% cash equity injection leaves essentially is at the 2-year mark.
Right. From your perspective, what does it mean when a broker says the deal is SBA pre-approved?
On an acquisition scenario, typically what happens is a business broker will send the business financials to their favorite lender and say, hey, do you think you can put something together that says, based on these parameters, the sale price is good, and depending on the buyer, we have, pre-approval of an SBA loan. That's what that typically means. And that's how they just kind of use it for a marketing tool.
Yeah. I mean, generally speaking, you can always tell when a broker's lying to you because their lips are moving when they're talking.
You don't like brokers?
They don't like me. It's mutual. It's fine. Uh, does the sector experience partner need to have a minimum percentage of shares?
No.
I guess not if they're in management. I think that's the main thing, isn't it? That they're actively involved, not just
Right.
like a token.
Right. Yep.
Thrown in. If the seller obtains the SBA loan prior to selling, can they get out of the PG?
So the seller
So I think
would,
they're suggesting that they draw down the SBA loan and then leave. Is that maybe the question?
so we would make the SBA loan to the buyer. And typically what we see is the majority of the deals are done through asset purchases. We do some stock purchases, but in either scenario, the SBA loan is made to the buyer and the operating business.
Do you have any strategy or suggestion for the refinance of an SBA loan once the equity position improves and more traditional financing becomes possible?
It really just depends. I mean, if you're buying a business that is very collateral light and you use an SBA loan to supplement, that lack of collateral and basing it on cash flow, there's typically not a ton of ways to refinance that loan. On a 10-year loan for an acquisition, there are no prepayment penalties. So if you desire to pay it off early, or if you do have the opportunity to refinance, typically, if you do any sort of conventional financing during acquisition, they try to make the term as short as possible to burn off the debt as quickly as possible. So it really just comes down to what are the favorable terms that you're getting through the SBA.
Can the seller do an SBA loan and sell the business and sell business sub to existing loan like is done in real estate?
An assignment.
I guess that's the question. Yeah.
Are those loans assignable? I was going to actually bring that up too. I don't think they are, though, are they?
No, they're not. But basically what we would do is we would give a loan to the buyer. The seller would take that cash at closing and then pay off their SBA loan, take any proceeds that they were going to make off the sale. Very similar to selling your home if you have a mortgage on it.
Yeah. Which industries do you typically lend towards? Are there any restrictions?
So the only restrictions that the SBA sets are gambling related, lending related. If you're in the lending space, the SBA does not lend. Adult entertainment, and that's pretty much it from their perspective.
Russian oligarchs?
Yes.
Cannabis and CBD, though, is not either, right?
Oh,
That
yes.
would be restricted.
Cannabis is not because it's not federally legalized. So we don't have any industry specific guidelines or targets that we deal with. So we're generalists and deal in a variety of different industries.
But non-THC CBD, that would be fine because that's not federally illegal, correct?
Yeah.
Correct. We also do hemp.
Yeah. An SBA broker told me that the equity check can't just show up in my account, but rather be there for some time, as it's supposed to be my skin in the game. Is this true?
So there is a seasoning requirement if the money, if you don't have verified proof, if you got it from a bonus at an existing job or got it through the sale of, an asset, there's documentation required along the way. But if you don't want to go through the documentation process, seasoning of at least 90 days is probably preferred.
Okay. Cool. Right. I think there's one more question over here. What banks are you using or are preferred? And can you take less than 20% ownership? So the 20% ownership one, yeah, we have covered. And it's just, you have to buy 100% of the business, but everything over 20% is a personal guarantor. Yeah, what financial institution makes the loan?
Well, in this case, like I mentioned in the beginning, Christian represents the lender, the bank that's actually issuing the loans that I work with as an originator. So we work together in partnership, so to speak. I don't work for his bank. He doesn't work for me, but we work in collaboration. So he's managing the entire process and kind of on the back end of everything. So yeah, and that's what I was mentioning from the beginning, is that one of the things that brought us together was I had been hearing from some of the business brokers that I was collaborating with for referral partnerships, and they were saying, we're selling businesses, but sometimes these SBA bank lenders are taking 3 to 6 months, even 9 months in some cases, right? And I think Christian had confirmed that, what he was seeing on his end. And so that's pretty ridiculous when you are trying to sell a business. And I think your timetables have been still in that 30 to 60, 45 to 60 day window. Maybe you can speak to that as far as that as well, because that's super important, not only for those of you who do decide, yes, it's a give and take, right? Like the personal guarantees there's some things that sort of go in the opposite direction of the creative strategies Jeremy teaches, but sometimes to be able to get those terms are great. But even if you buy it creatively and you're then eventually reselling your business, you want to be able to sell it with SBA, because then, when you buy the business, you want the least amount of cash, but when you sell the business, you want to get all cash. So if you can get somebody to do an SBA loan and buy it from you and you get paid out, great. So maybe if you can speak to that situation, that's one of the biggest benefits of working with a group like us to do this.
Yeah, timing for sure, Dan. Typically, again, because an SBA loan is all that I provide, Dan obviously provides a full array of financial products, but the SBA loan is the only thing that I work on. And so therefore, we're able to cut down a lot on the timelines. We know where sort of the obstacles are, what to look for, and we're typically turning deals in that 45 to 60 day range.
Fantastic. What valuations do you typically support? I'm guessing like price earnings type arena.
So typically in the small business sector within the United States, we typically see sale prices somewhere between 3 to 5 times EBITDA. Typically, that's what businesses will support from a cash flow perspective as well. Publicly traded companies obviously are much higher than that, but when you get in the true small business sector, I would say be on the lookout for anything between 3 and 5 times EBITDA.
Cool.
What if it's like an e-com small business or a SaaS company that's going to generally have where they get into some of those double digits? I mean, are you guys following sort of kind of a common investment banking M&A guy, because again, like if it's an e-com business that's doing $1 million a year in EBITDA, like they're not going to trade at 3 to 5. It's going to be 10 plus, I think, in a lot of cases. So you do acknowledge that?
We do acknowledge that. Obviously, the one thing that we're going to look at is, repayment ability. What does the business show that it can repay? So that's, from a valuation standpoint, that is, the multiple is important. However, when we're looking at the lending piece, it really comes down to what can the business afford from a cash flow perspective.
Can you service the loan? Yeah, serviceability.
Right.
Yeah. Cool. Well, we're actually just coming up to the hour, so this might be a really good time to kind of draw a line here. Were there any slides left, Dan, that we need to go through that you think would be valuable for people, or are we done? Yeah, there we go. That's the most important slide, which is if you want to reach out.
I just wanted to give a quick conclusion here too. One little I guess an example, and then maybe a conclusion here, is that just to give you an example, if you maxed out the $5 million loan term at that 6% rate, just to kind of give you an idea of what the debt service would cost on the 10-year term, you're talking $55,510 per month. I don't have it in a slide, so I apologize. If you had real estate included and it was at the 25-year term at the $5 million, you're talking $32,000, $32,215. So for that amount of money to control that amount of capital is a pretty low, and that's principal and interest. We can always give you amortization schedules. You can run it on a basic calculator. And again, I just kind of wanted to say, it's going to come down to, and we can get in, again, if we have the individual calls, I don't want to go too far over here, but there's other questions people are going to have about, can I be an absentee owner? How much involvement do I need to have? What's the experience level? Can I bring in a management team, in lieu of the experience of the owner? Because sometimes if you have these serial entrepreneurs, they're saying, I recognize that I would like to buy a canning salon business, for example, because of the recurring revenue or whatever, but maybe I don't have that experience, but I bring in somebody like that. So I don't know if you want to take a little bit more time to go through that, or we can do that individually, but these are some of the things that are important to note. And then also it's kind of like, they are looking at tax returns. So it's kind of like this dichotomy of, we're trying always to reduce our taxable income, but that obviously affects what we can qualify for. So I don't know if there's any very quick distillation that Christian, you want to contribute on either of those two subjects, but I think that's the only thing remaining that I didn't get a chance to talk about so far. And then my contact info here, of course. But
sure, I would just highly recommend anybody that's interested, book a call with Dan. He'll get everybody on the same page and get everybody in touch. The M&A space, as most of you know, is very deal specific. We recognize that, we value that, and so it really is just going to depend on the situation. As far as your second question, Dan, which was, remind me again.
Well, I'm sorry. The other question had to do with the involvement of the buyer, and some people want to be an absentee owner versus like how much involvement do they need to have, sort of things that we were talking about.
No, again, that's really just going to be kind of very individual deal specific. So, but if anybody wants to discuss anything, please feel free to reach out to Dan. His information is right there, and we'll get everybody. Yes, taxes. The interest is tax deductible. I always tell if you're selling a business or buying a business, you can't have your cake and eat it too. If you have structured your business in a way that you minimize your taxable liability by reducing your net income in all the proper ways, you will not get full benefit on that resale. Just pay attention to that. A lot of times sellers will want a bunch of different things added back into it. We have to be cognizant that you got the benefit when you paid your taxes. We need to make sure that you don't recoup the benefit. Obviously, it's not going to transition over, but yes, interest expense is completely tax deductible. So is life. If you get a life insurance policy for the business to protect yourself as well, that payment's also tax deductible. There's a lot of different benefits to that as well.
All right, and then like I said, to conclude, I assume that everybody that's part of this group is plenty qualified. I don't need to make you jump through any hoops. If you want to just book a call with me, go right to fullyfundable.com/call. You'll get right on my calendar. You can email me, you can call me. That's my mobile number. I'd love to speak with anyone that wants to. And I appreciate your time and ability to be part of this, Jeremy and Wayne. Thank you for organizing this as well, and Christian, of course, as well. So I'm here for anyone that needs any questions or to get the process started.
Fantastic. Well, Christian, Dan, thanks so much for spending the time, and obviously everybody in the community. We had a few people listening in right now, but obviously this video will be posted in the app as well for people to watch. So yeah, anyone that wants to find out more, do reach out, and obviously, yeah, make sure you structure the deal in the right way. I think it sounds like actually the bank will appreciate a well-structured deal with protections built into it. So make sure you're not just getting as much money as you possibly can and throwing it at that star employee so that they can leave, but actually structure it in a way that makes sense for you as well. And it is a buyer's market out there, so there's not a big queue of people standing around with checkbooks ready to buy businesses. So you can push back quite a bit in these situations, and obviously if you're not dealing with a broker, that's enormously helpful, because you can have a direct conversation with the owner, or with a rational content to that conversation, rather than made up funny numbers. So yeah, Dan, Christian, thanks so much for your time. Hope everyone enjoyed this, and be in touch soon. Take care.
All right.
Cheers.
Thanks, everybody.
Cheers.